Okay, well, good morning. Welcome to the latest in our video series on company reportings. I'm here with our senior analyst, Ravi Lockyer, and today we're going to be discussing HSBC that saw their results coming out this morning. So, Ravi, HSBC, it's a stock you know very well. A lot of people will know a lot about it and have it in their portfolio. So, tell us what's happened.
Okay, well, sort of mixed emotions here because I actually thought the results were reasonably good. As usual with the banks, there's something of a curate's egg. There's some things that are more concerning and some things that are less concerning. I would point out that the market has reacted, marked the shares down, albeit in a weaker context this morning. I think because whilst on their face the results were good, there were some items that caused concern, notably revenue was off 4%, profits were up 32%, but reflecting a number of one-off items. There was a debt valuation adjustment that was worth about $1.1 billion that was helpful, that boosted profits for the quarter. There was also a big drop in the expenses, significant expenses. They dropped from 1.7 billion in Q3 14 to only 456 million this quarter due to a drop in PPI and legal expenses, which is another one-off item. So there was a net improvement in significant expenses of 1.2 billion, a DVA adjustment of 1.1 billion. Global Banking and Markets, the division that does HSBC's investment banking, saw trading income higher by 24%, but a large drop in expenses of 1.1 billion, which is also very helpful. So a number of one-off factors. The tax rate was very low this quarter, only 10.4%, which is less than half the normal tax rate of the company. So that all boosted earnings. Having said that, the numbers I thought were good for the quarter. Leaves HSBC at the end of 9 months on a profit of 73 cents. They should easily beat the forecast, which I think is around 80 cents for this year. I would have thought by at least 10 cents. So we should end the year with about 90 cents of earnings from HSBC. And at the 9 month stage are at 73 cents already. So a number of one-off items in this results, but overall they haven't taken any hits in China, which is positive.
Okay. Yeah, I mean, you know, the theme that came out there was a lot of one-off things. So what does that mean in terms of, you know, maybe looking a little bit further ahead? You know, the end of the year, maybe even next year. There's rumours of them moving their headquarters, for example. Is that uncertainty sort of maybe factored into a price, or you know, what do you think?
Well, in terms of next year, I think we're going to see more of the initiatives that have been put in place recently, the cost savings, become more relevant to the bottom line. There have been significant cost improvements and exits from given markets that we were in for some time, not doing very well in Brazil, for example, that will drop out over the course of the next year. We've got very high capital levels, so capital rose 0.2% in the quarter, which is very good considering HSBC pays a very high dividend, which is a deduction from capital. So capital is still rising, notwithstanding the very high dividend that HSBC pays. They're at 11.8% now. They should be comfortably over 12% middle of next year, at which point the company could consider a higher dividend or a share buyback, which was mooted about a year ago. It's forecast that HSBC will be the first company, the first bank, to buy back its shares, possibly over the next year. We also have the domicile issue, and we've got some news on that today. That they've raised the point that they did give a deadline for the end of this year for the domicile issue to be decided, and there may be some slippage in that timetable. It's been noted in the UK press that the company is considering a move to the United States. It's not just the UK or Hong Kong. They appear to have widened the parameters of the search, and are looking at America as a credible alternative to Hong Kong and the UK. So it may well be that that's caused slippage in the decision making, and we're now looking towards maybe first few months of next year for a decision on the domicile.
Okay. And just in your opinion, what HSBC leaving UK, what kind of message would that send to the rest of the banking sector? What would that do to the banking sector in the UK, and how would that affect potentially other markets?
Well, it would flag up the issue that I think has been on people's minds, which is that the bank levy and the charges on the balance sheet that were introduced a number of years ago have been played with a number of times now. The tax rates, the tax charges in the UK have risen quite substantially. There is a limit to how far this can be pushed, and I think we've probably at or maybe exceeded that limit already. And there will be, I think, a significant problem. I think it would be a tragedy if HSBC left Britain. And I think the tax rules for banks need to be looked at again. If HSBC leave, it's very likely that Standard Chartered would consider leaving as well. And we're seeing, I think, a more competitive landscape where banks are at least encouraged to shop around the world. Should HSBC leave, there'd be a listing problem because according to the listing rules, you cannot be a non-UK domiciled company and have the primary listing here. So there would be a listing issue as well as a revenue issue for the UK government. Obviously, HSBC has to do what's right for its shareholders, and if it can extract significant gains in moving domicile, then it's going to be commercially minded. And that decision, we're almost at that point now, but not quite. I think that decision will be made in the next few months, and it will be very important for the sector and for the economy.
Well, it sounds maybe that it's moved beyond a pure posturing way that HSBC of looking at things to an actual. Well, now we need to start thinking, very, very seriously and moving beyond just talking. So I think, from what you're saying, there's a lot to keep an eye on, which we will obviously do via a number of these videos and reports. So Ravi, thank you very much.
Thanks, Adam.
I hope you enjoyed the video today. Anything else that you'd like to see covered in some of these videos, please leave your comments. Ravi has also produced a PDF report on what we've discussed here today, so if you would like to get hold of it, you can download it on the website. It will be below this video on our page on our website. If you're watching us on YouTube, that's www.css-investments.com, and we will see you again. Thank you.
Thanks.